AS 22 speaks about what here? I'm pretty sure that once you touch upon AS 22, you think about something called as deferred taxes. Question number one, what are deferred taxes? By the way, what are the taxes covered here? Only the income tax. Be serious, you don't care about all your excise duty, service tax. Simple as only income tax. What are deferred taxes? How are they different from provision for taxes? In a purest form, you actually don't compute taxes under company law. What you're actually trying to do is, you're only trying to identify the reason as to why the total income is a bit different from the profit that you compute under your accounting records. And the reason for difference, you find that the amount on which you compute taxes and pay for the current year is different from what you could have paid if you're going to measure it based on total income. But more importantly, the idea is more like this. Some differences that are happening, there are some computations that are being done. This can have an impact on subsequent year's taxes. When like we are saying depreciation as an example, the idea is very simple. If on a depreciation income tax came having a different number, tomorrow whatever extra depreciation that I am charging or lower depreciation I am charging will be offset by a higher or lower depreciation for taxation purpose, and therefore directly or indirectly it is affecting my subsequent year's tax obligations. In a simple explanation, you are actually not computing taxation under company law. You are only computing taxes assuming it was done on the profit that was already ascertained under company law. Computation of tax is only done under income tax law. Very change. So deferred tax provision for tax ke enna vyathyasam, which is where he made a very small mistake. Provision for tax, deferred tax, you had a very same thing. Provision for tax is what you are required to actually pay. Deferred tax, you may never pay. Deferred tax is something that you are looking at as an obligation that may arise beyond 12-month period. Chennai example. Provision for tax, you are categorizing only under current liabilities. Deferred taxes, you'll find that is getting disclosed only under non-current liabilities or non-current assets. Nammurla, India still follows a previous year assessment year concept. So financial year 16-17. Either actual tax liability will pay in financial year 17-18. We call that as assessment year. So whatever you required to pay in 17-18 current liabilities, provision. If these adjustments are going to impact next year's taxes, that is for financial year 17-18, other kind of taxes you might end up paying or saving when 18-19, beyond 12-month period, and therefore these items are getting categorized under non-current. In the purest form, let's be very clear, guys. Deferred taxes are what? These are taxes paid or payable, yeah, and having an impact on the subsequent financial year's tax obligations. Major item avladha. So if it is not getting affected in the subsequent year, we don't call that as deferred taxes. You sonna depreciation, provision for bonuses, but did we even speak something about the cash payment disallowance? We didn't. Because cash payment is like gone deal. Penalties, gone deal. Once disallowed, they remain disallowed forever. Once these are added back, these are remaining added back forever. Or your weighted deduction under section 36, 35, sorry. The research and development expenditure. 100 rupees chalavu pannite, 125 you claim, extra 25, you will never debit in your P&L account at all. Gone for good. These kind of differences we don't care. Above we are indirectly looking at something. What is that here? Looking at those changes or adjustments made in computing the total income and tax on total income, which will get reversed or adjusted in the subsequent financial years. Bonus, current year I am disallowing because it's a provision. Next year I am allowing because it's an actual expense. Depreciation, same point. TDS disallowance, every audit fee is getting disallowed these days. because of TDS. நான் இப்ப பிடிக்கல, ஆனா அடுத்த வருஷம் பிடிப்பேன். So when I'm going to deduct them, I end up claiming that as a deduction. EPF payment made beyond the due date of filing return of income. எத்தனையோ பார்க்குறோமோ, current year is next year load. Current year added, next year subtracted. அப்போ current year adjustments are having an impact on subsequent year's adjustments. Is it clear, guys? That's what we're calling it as. That is why you'll always find that deferred taxes are referred to as tax effect of what is popularly called as timing differences. So we will have something called as timing differences, which is what I try to relate here. On that, whatever tax amount that you're going to compute, we'll be referring to that one as deferred taxes.